Hello, my name is Zoltan. If you're looking for content on the Swiss real estate market in English, you come to the right place. You are not the only one. Many people who haven't invested in the Swiss real estate market are currently looking at the Swiss market. What we see is some people who before had higher return expectation are now looking more to looking for stability in a more unsafe world. What we do is actually covering the market from a research perspective and do give updates on a regular basis for our subscribers. But let me show you our slide pack, our flagship publication, which comes out every month. I will walk you through some of the aspects and hopefully you like it and hopefully you come back to the platform, and you please also don't forget to like. That would help us also here also with the algorithm. But let me share my screen for now. Now the sun also came out a bit also for a while, so that's what we have here at the Lake of Zurich. Sometimes in winter it's not the best time to be here. It's quite foggy, but the summer it's nice, and summer in Switzerland is certainly a great thing to experience. So I would like to share some of the slides. You see here the structure. First, I'm usually going through the macro, but what we need to realize actually is the whole changed global environment that impacting real estate investments all over the world. Switzerland has a special place actually because it has a very strong currency, and that strong currency has allowed Switzerland to lower interest rates back to zero. Actually, the inflation is also around zero, and that makes it actually a special case for safe haven bids, and that's what we are seeing. That many investors outside of Switzerland who haven't looked at the Swiss market now start to look at it because here what we used to have in other markets before the big inflationary shock from 2022. TINA, there's no alternative to real estate. It's no longer valid in other countries, but in Switzerland it's back valid because we have a 0% interest rate. But also Switzerland operates in a global geopolitical context, and also the Swiss model needs to adapt to it. What we have seen also with the tariffs from Donald Trump. However, the economic perspective are rather stable also to the Swiss market. If we look at GDP growth, this shows the evolution of consensus, what the average of the economists also think about growth in 26 and 27. So there was a slightly downward adjustment, but it's still what we still have is a consumer-driven growth. I also usually look at Switzerland in a global and an European environment as well. And what we see is, that's just the monthly monitoring of an economic indicator, but what we have seen is here also a weakening of the labor market that has been somewhat stronger in Zurich area than elsewhere. But if you look at these pictures of January, that has been a change of unemployment rates on a Swiss level over the last 12 months. That's comparing December to December, and we are also facing like a weaker job market. So one point is certainly the weaker dollar and the stronger Swiss franc, which creates some problem for export-oriented firms. But what we have is also the labor market general, I believe, is currently also impacted by the AI boom. So especially if we look at tech companies, they're no longer creating as many jobs as they used to be. And Zurich is actually a tech hub. A lot of people would be surprised about it. Google has its European headquarters here. And so we have quite a lot of skilled tech people for domestic people, but Switzerland has been also quite popular for experts also due to the high quality of life. If you look back at the Lake of Zurich in the background, you probably know why. So, but we're also facing somewhat a labor market weakness on the macro side. Yeah, we usually discuss about inflation. We don't want to talk about that too much. We have all our models. I used to work in my past also at the Swiss National Bank, so I know what kind of models the central banks tend to look at. So and that's also helped me certainly in our assessment. What we have is here the interest rate situation. Actually, what we see is that swap rates are a bit higher than the government bond yields, but we're still below 1%. The yield curve is positively sloping. That means markets are expecting some interest rate increases, but they are some way in the future. I think the first interest rate increase is priced in just for 2028. So what you have in Switzerland, if you buy real estate like at the yield of 2.5 to 3%, you have like mortgage costs between 0.8 and 1.5%. So, I mean, as an institutional buyer mostly, then for residential properties. So you have still a positive financing spread. So I'm covering all that international financing condition, investment condition. But look at the real estate market, and I'm showing here the difference between the evolution of government bond yields in Germany versus Switzerland, and we see here a big change. So until 22, more or less, they were moving in line, and then something has happened. The Ukraine war and the German policies of abandoning their nuclear power has hurt them. So we see a lot of energy issues in Germany. In Switzerland, on contrast, the strong Swiss franc has helped to bring yields down, and I made his blunt statement. So it's really the interest rate difference. You can tell we have low vacancy rate in the Swiss residential market. We have low vacancy rates in the German residential market. Actually, in the German residential market, we have higher rental growth than in the Swiss market. So it's mainly it's the financial market conditions that are dominating and are responsible that we had actually in 2025, we have on the Swiss real estate capital market, we had one of the strongest years. So capital was flowing back very strongly again to Swiss real estate. Here just some data and what we are seeing, and if you are not based in Switzerland and you are more a foreign investors, you have also to be aware that we have a Lex Collar. The Lex Collar forbids foreign investors to invest in residential real estate. So mostly then if you want to buy like a direct real estate property, you can just buy like the commercial real estate property. So on the listed side, it's you can as a foreign also buy residential properties, which are part of listed vehicles. So, but I want just to make you aware, and you need also to consult, certainly also to have with tax advisors if you want to set up such a structure. And what we are seeing, actually, residential has been outperforming, but also commercial real estate had quite a stable performance. Actually, we have some dip also in the Swiss commercial real estate market, which was much lower than elsewhere in the world. But at 2025, we saw again a positive capital value growth, and we expect that also the commercial side likely to also to benefit in the future. So so many slides here. I'm covering condominium prices, for example, here based on the data from Wüsten Partner by cantons, which are the states. So we have seen like actually the central part of Switzerland, like Zug, Schwyz, have seen quite a strong short-term momentum, but also strong long-term momentum. On average, we have over the last 20 years, those who were owning occupied real estate have seen their portfolio increase by 4%, and that's unlevered. If you were then applying like a typical 66 to 80% LTV. So certainly the returns on investments has been quite strong for owner-occupied residential real estate, which we also cover in addition to the institutional market. So, but I don't want to spend too much time here. So what I wanted also to show you our coverage of the listed real estate market. So we have investment foundation, which are not only accessible for pension funds, we have stocks and we have listed real estate funds. And last year, as you see, it's quite a strong year in terms of return. Stocks have been outperforming, and I think one reason is also because we have seen quite a strong foreign bid for listed real estate, and the companies are much more liquid than the fund. So if you want to deploy capital into the Swiss real estate market indirectly, so you first go probably to the bigger companies like Swiss Prime Site, PSP, or all the smaller ones, which have a much higher stock market capitalization and also trading volumes like funds. Having said that, I see also opportunities currently for commercial real estate funds, because the companies are more into commercial real estate and they've been doing quite strongly. But the funds, which have a different investment base, which are more the pension funds and Swiss domestic investors, have been underperforming. They have been underperforming the stocks, and they've been underperforming the residential real estate fund. So a lot of content I would like to share with you. What you need to realize if you come to Switzerland and also want to invest in residential real estate, the residential market is currently quite overheated. On average, investors pay for investment into real estate funds that are in residential real estate a premium of more than 40% on average. For the commercial market, it is much less. It's probably 70-80%, 18%, sorry. And it's more in line with historical averages and not as overheated as for the residential market. So, but if you're interested and you look at it, so please come back to us. We cover actually also very various vehicles. If you want to look at it, I'm showing here more a mortgage fund. So and we also provide a strategic commentary and recommendation. Those who want to sign up for our premium service at Macro Real Estate. Otherwise, don't hesitate to contact me also via LinkedIn. The contact details are below, and thank you for your attention.